Fazila binti Haris Fazila, metric number 23DLS20F1037 from DLS 1C. Accounting process or accounting circle. Definition of accounting circle is step-by-step accounting process that begins with the recording of business transaction, posting to journals and ledgers, and it ends with the preparation of the company's financial statement. The accounting process or accounting circle begins when a business has activity. There are 8 steps in accounting circle. Step first, source document. All business activity must be supported with document as evidence of the business activity conducted. Different source documents are used for different kinds of business activity. Step 2. Books of prime entry. Information such as name of customer or supplier, date and amount written in the source document will be recorded in the book of prime entry, such as cash book and the journal. Next, step 3. Ledgers. Entry or records from the books of prime entry are then posted to the various accounts in the ledger. The entry in the ledger account are based on the double entry system. Step 4. Trial balance. At the end of each month, the ledger's accounts are closed and a trial balance is prepared. The purpose of preparing the trial balance is to determine the equality of debits and credit.
My name is Siti Aisyah binti Muhammad Razali, and my matrix number is 23-112-20F1033, and class is DLS 1C. And today I want to talk about adjusted trial balance, financial statement, and financial report. What are account adjustment? Account adjustment, also known as adjusting in entries, are entries that are made in general journal at the end of an accounting period to bring account balance up to date. There are 4 types of adjustment. First is accrued income, and second is accrued expense, and third is accrued prepaid expense, and lastly is prepaid income. Accrued income is an income has been earned but not yet received, is considered as current asset, and accrued expense is expense has been incurred but not yet paid, is considered as current liability. And unearned income is an income, or prepaid income is the income that has been received but not yet earned, is a current liability. And prepaid expense is a expense that has paid in advance but not yet incurred, and is considered as current asset. Hello.
Hi Aisha, already done with the homework that lecturer give?
Yes, I'm done. Why? Do you have problem?
Yes, I have. If you look at question B, which is salary accrued RM 715, and the
Yes.
trial balance is RM 5,000. How can I adjust it?
Okay, for this question, you just need to the trial balance salaries RM 50,000. You just need to add the with 750. So the amount is 15,000 and 750. Any more?
Yes, last question.
Okay.
How about the rent and rates back in advance?
Rent and rates. Okay, for rents and rates in advance RM 1,000. if we look at the trial balance, red and red is 3,000. So you just need to minus 1,000 with 1,000. So equal is 2,000. Okay. Trial balance, adjusted trial balance represent a listing of all the accounts balance after posting of all the necessary adjusting entries in ledger accounts. And the purpose of preparing an adjusted trial balance is to correct any error. Financial statements is the balance from the adjusted trial balance will be used to prepare a financial statement. Secondly, financial statement is consists of Sochi, and secondly Sophie. They are formal record of all the financial activity of business in all the accounting period. Financial statements are often audited by government agency to ensure the accuracy for tax. And financial statement, the example is balance sheets, cash flow statement. Financial report is the summary of the business activities obtained from the financial statement will be present in the form of financial reports. The example is has been present at the slide.
Hi, Assalamualaikum. My name is Nur Taki Fauzna binti Muhammad Zain from DLS 1C with my matric number 23 DLS 20F1029. I will talk about debit note and credit note. A debit note is a commercial document issued by a buyer to a seller as a means of formally requesting a credit note. Debit note get as the resource document to the purchase returns journal. In other words, it is an evidence for the occurrence of a reduction in expenses. The debit note contains the date, description of items, total value of additional amount charged, and the name of the person in charge. This is a sample of debit note. A credit note is a commercial document issued by a seller to a buyer. Credit notes act as a source document for the sale return journal. In other words, the credit note is evidence of the reduction in sales. The credit note contains the date, description of item, total value of reduction, and the name of the person in charge. This is a sample of a credit note. How to remember credit item and debit item? I just found the acronym for the debit and credit item that is known as PER. P-E-A-R-L-S. PERS. PERS. P stand for purchase. E stands for expenses, A stands for asset. This PEA for debit note, YR stand for revenue or income, L for liabilities, S for sales. These are LS for credit. So you remember PER, you will remember debit and credit very easily. Okay. That's all from Husna. Thank you. Bye.
Everyone, my name is Nur Aisyah binti Ibrahim. My matric number is 23DLS20F1025. I'm from DLS 1C. Today I want to talk about Book of Prime Entry. Book or record which certain types of transaction are recorded before becoming a part of double entry bookkeeping system. The Book of Prime Entry, also known as the Book of Original Entry. This is another step in accounting cycle where the first accounting transactions are recorded. The books are also known as journal and cash book. What is the function of book of prime entry? The function of the book of prime entry is to record information regarding the business activities from the source document received or issued by the business. The information in this book are summarized and posted into a general ledger which the financial statement are prepared. Books of prime entry can be categorized into the three types, which is special journal, general journal, and cash book. So I want to explain about cash book. What is cash book? The cash book is used to record all cash transactions of a business. It works as a book of original entry as well as a ledger accounts. Cash book can be categorized into two types, which is 2-column cash book and 3-column cash book. First, let's go to 2-column cash book. The double-column cash book, also known as 2-column cash book, has two money columns on both debit and credit side. One to record cash transaction and one to record bank transaction. 2-column cash book show cash receipt and payment as well as details about bank transaction. This type of cash book is used to record entries without cash discount. Next, 3-column cash book. The triple-column cash book, also known as 3-column cash book, has 3 money columns on both debit and credit side. One on each side for recording discount, cash and bank amounts. It is used to record all cash receipt and cash payments. This type of cash book is to record entries with cash discount. Next, what is different between 2-column cash book and 3-column cash book? The 3-column cash book is simply the traditional 2-column cash book with the addition of an extra columns at each side. This extra column is used to record cash discount, which is discount allowed column at the debit side and discount received column at the credit. That's all from us. So I hope you guys understand what is accounting process, about source document and books of prime entry. So I hope you guys enjoy this video. Bye!